South Africa says uncertainty from U.S. trade moves is accelerating its push to deepen ties with partners like China, even if that means raising uncomfortable issues. It signed a framework agreement for a new trade deal with Beijing last week, just days after a short-term renewal of a long-standing free trade agreement between the U.S. and African nations until the end of the year. And this paves the way for a so-called early harvest program expected by the end of next month that will grant duty-free access for South African exports into China and encourage more Chinese investments in the country. CNA senior correspondent Olivia Siong spoke to South African Trade Minister Pak Thao in Cape Town on the latest trade moves.
It was a conscious and strategic decision to take advantage of a relationship that already exists from a trading point of view and to enhance it. And there are opportunities on both sides. Part of the agreement is about how we create opportunities for South African companies to invest in China, how Chinese companies can invest in South Africa. We are significant importers of Chinese product, including automotives. BAIC has been in the country for some time, and they are converting into complete knockdown and therefore manufacturing in South Africa as of this month. And Cherry has made an offer to buy the facilities at Nissan and to start producing in Pretoria. We had discussions around steel and opportunities along the steel value chain.
To what extent, though, was this accelerated by trade moves that we've seen by the U.S.?
Well, we try not to counterbalance the two. If you think about it, China and the U.S. are our two biggest trading partners. We need to enhance trade with the two countries, and we need to ensure that we're able to deal with whatever issues are coming up. Of course, the whole world has had to engage with the reality of U.S. tariff decisions and the impact that has on trade, and that accelerates the need to diversify and to create security for your own industry in the country. But we continue to take a view that we should engage with the U.S. It certainly does speed up our engagement with other countries. Certainly, China's importance has increased. This is our number one trading partner. So the fact that China has made the point and said, look, we're creating access to market for you is a significant statement.
We're talking about Chinese investment into South Africa, but you've also mentioned that industrialization tied to this investment is important. How do you plan to enforce that?
Of course, in any trade relationship, there are areas of discomfort. There's the reality that we've had our smelters in chrome and manganese closing down, and a lot of this product going into the Chinese market. And we said, but can we try and ensure that we get Chinese investors to do these sorts of investments in the country? And China has been open to that discussion. So sometimes these discussions get to that point. There are areas in which we've had to discuss anti-dumping measures that we've introduced because there are products that we believed are being dumped in the country. But it's a conversation that we're having. We took a view in our discussions last week that, look, in areas where there's discomfort, any of us should be able to raise that. And we should be able to resolve these issues before we take extraordinary measures.
So what are the next steps?
The next steps are the early harvest agreement that will be signed by the 26th of March. It gives us about 5 weeks in which to work on a very intensive program. The second is an agreement on green minerals and industrialization that we have in discussions with and have expressed appetite to participate in the green mining and minerals program that China has announced. We signed MOUs with the standard bodies in China, and that creates easier access to market because if you've resolved your standard issues, it is easier to get your products into the market.